Hello and welcome everyone. This is Professor Siddharth Surana. I hope you guys are doing good और मैं तो हमेशा मस्ती रहता हूँ. Welcome to the RTP lecture for CA final November 2024 exam. This RTP lecture is going to be divided into three parts. So ICAI has released three sets of documents as far as this latest update thing is concerned for your November 2024 exam. First thing released by ICAI is something called statutory updates. So whatever latest circulars notifications have been released are covered in the statutory updates. We will be discussing the statutory updates first. Then between the last case law lecture and today, there have been new judicial pronouncements. Hardly 4 or 5 are there, but judicial updates means the new case laws. And finally, ICAI has also released RTP question answer part. RTP of November 2024 exam contains some MCQs, case study as well as standalone MCQs and some subjective questions. As far as the MCQs are concerned, we will be doing detailed discussion of the MCQs because they have given the answers but not the solutions. So I have solved these MCQs. Obviously, the solutions will be discussed with you. And as far as the subjective questions are concerned, because they are already solved by institute, we will only discuss. A couple of them have some adjustments that you should be aware of. You should note them. So we will be discussing that. So these are the three documents released by ICAI. If you go to Board of Studies Knowledge Portal, BOS Knowledge Portal, you will get the link to statutory updates. Kindly download that PDF. You will get the link to judicial updates. That is the new case laws. Kindly download the PDF. And you will also get the RTP. If you have all the material handy with you, then you can continue with the lecture. So first thing that we are going to go and do is the statutory updates, the latest circulars. The reason why we are doing the circulars and the case laws first are that there are some questions in the RTP which are based on some of these circulars. There is one question on a case law also. So first we'll finish the circulars, the statutory updates, then we'll finish the case laws, the judicial updates, and finally we will go to the question solving, so that at the time of question solving you also understand that what impact these circulars or case laws have on your questions. So when they have introduced the statutory update, it is roughly about 29 page ka document. What they have done is all the circulars and notifications up to the 30th of April have been incorporated. So as you are aware, Finance Act 2023 is applicable for your attempt previous year 23-24, assessment year 24-25, and that was the last study material edition released by ICAI. However, all the circulars and notification issued up to 30th April 24, which were obviously not covered in that previous study material, are also a part of your syllabus. While they have incorporated almost everything that the government has released, only some of them can have impact on your sum solving, impact on your examination approach. So whichever circular has got an impact on your examination approach, I have highlighted them. So as we proceed in this PDF, you may kindly take note. First, they have given an index about what are the things that they have covered. So there is something covered in capital gain, something in charitable trust, something in TDS, something in assessment procedure, something in tax audit, something in non-resident taxation. Under capital gain, they have only released one circular that there are some securities which will now be specified for the purpose of not considering the transfer as a taxable transfer, so that there will be no capital gain arising on them. This is majorly related to IFSC. No need to waste time in reading also. It is not much relevant. However, everything that I say which is not relevant, if you want for your safety purposes, on a safer side, if you want to do a plain reading, that's enough. Do not waste a lot of time in the circulars which I am telling you not to do. Only one reading is also enough. Next is related to charitable trust, political party and other entities. 11.5 is the section under which the specified modes where a trust can park its funds are given. So they have given a new asset here. This is also a place where a charitable trust can keep its money. That is units of power grid infrastructure investment trust. That is where a charitable trust can keep its money. Next comes a very, very important clarification. So that now I have highlighted this second circular of charitable trust. This is going to affect your question answer solving. If you are aware that there is a latest amendment in the charitable trust chapter, if you are aware, matlab you have to be aware. This amendment was covered as per Finance Act in our regular courses also, that whenever a charitable trust is making donation to other trust, it was taking it as an application of income. But what is happening is that the receiving trust, supposingly trust A is donating 100 rupees to trust B, so trust A was taking deduction as application of income. Trust B is adding 100 in its income. While Trust B is adding 100 in its income, it is taking deduction of 15% and therefore net may it is offering to tax only 85. So the amendment that has come is that under application of income of Trust A, we are going to consider only 85. You are aware of that? So donation to other trust will now be eligible for application of income only to the extent of 85%. 100% deduction is not going to be given. Correct? Now comes an important question, that when a charitable trust has got its funds, it is allowed to keep money only in the modes given in 11 subsection 5. Only those funds which are invested in 11 subsection 5 modes are going to be considered as eligible investments. Anything other than this is going to be considered as misutilization of your funds. So the problem is, in our income we are subtracting only 85 because donation to other trust is now not fully eligible for accumulation of application of application of income. We are going to consider only 85%. So that remaining 15% we should apply in 11.5. But the question is, how can we apply that? Because while I am getting deduction only of 85, I have donated the full 100. Think about it. Think about Trust A. Trust A has given 100 to Trust B and taken deduction of 85. But the remaining 15 is also not with us. No, we have already given it to Trust B. It is not possible to invest the remaining 15 in 11 subsection 5 modes because we don't have the funds. We are taking deduction only of 85. But that 15 is also not with us, and therefore the clarification is, it is hereby clarified that 15% of such donations by the trust shall not be required to be invested in the specified mode under 11.5 as the entire amount of 100 has been donated to the other trust. As the entire amount has been donated, obviously you don't have the funds, you will not be able to invest. This is a relaxation basically given to charitable trust on the basis of the amendment that has taken place, that only 85% will be considered as application, but the remaining 15 has also gone, and therefore you cannot invest in 11 subsection 5. Very simple. They have given a numerical example. You may read it, so you'll understand more details about it. Next is basically the extension of due date recently. This keeps on happening continuously. This is not something that is going to affect you as far as your examination is concerned. Next, we have circular notification from the chapter TDS. Section 194A falls in the definition of hot favorite sections, Archage, interest other than securities. And other things about 194A you are already aware. All assessees are required to deduct, but individual HUF only if last year ka turnover exceeded 1 crore in business and 50 lakh in case of profession. However, in section 194A, it is mentioned that in case of certain specified securities, 194A will not be applicable. Means government will notify the exceptions. Government has notified a latest thing, Mahila Samman Saving Certificate, and therefore this is not going to be attracting any TDS under 194A. Very short, simple. And the next is related to IFSC. IFSC has got lot of tax benefits, not relevant as far as examination is concerned. The next circular which is relevant for your exam is circular number 4, which has come on 194O, that is TDS on e-commerce operations. We are aware that under e-commerce 1% TDS is going to be applicable under 194O for resident e-commerce transactions. Of course, we are aware non-residents are covered under equalization levy. So with respect to this e-commerce, there are a few clarifications that have been introduced in this circular, and on this circular there is one full-fledged case study based MCQ in our RTP. So did I not tell you that first we are doing circulars and case laws so that we can solve the questions from the RTP. So circular is latest, and on the latest circular there is a latest MCQ that institute has covered. So we have to understand this circular properly. Also, I have made some markings in the statutory update PDF. I have made some markings in the judicial update PDF, and plus the solutions of the MCQs. So the PDFs of these things that I have made, obviously this is institute material, but I have made the modifications, the marking, etc. We will be uploading it either on our Telegram channel, or I will be uploading it under the free courses tab of SS Pro Educare app. So if you look at the ticker below me, you will get the link to the Telegram channel. All you do is go to Telegram, on the search bar, type CA Siddharth Surana. You will get the Telegram channel ka link. Either we'll put the PDF there, or alternatively, most of you all must have already downloaded the SS Pro Educare app. Under SS Pro Educare, it is available on Windows, Android as well as iOS. You go to the free courses tab. At the top, you will get a green color tab of list of courses. You have to scroll that top green tab. So you will be able to access all the free resources that are available. Open the app, hit free courses. At the top, there is a green color label. You have to scroll that. So all the free courses will be visible. In that, you'll find the PDF of this. So either Telegram or app, one of the places I will be doing it. You may stay subscribed to the Telegram channel, as well as obviously app, so you all have downloaded only because you are accessing the lectures. So ladies and gentlemen, 194 requires TDS at 1% on the gross amount under e-commerce. I am not doing every single line ka reading, that much is not required. I'll focus on what is the new thing is introduced. See, already you are aware that 194.0 is talking about e-commerce. Here they have given an introduction because government has to give an introduction with respect to everything. Okay, we are aware that e-commerce operators are required to deduct TDS. Now the clarification one by one they have given. Sometimes what is possible that multiple e-commerce operators are involved. There are two portals, one portal from where buyer is accessing the data and another portal where the seller has listed. So what will happen is, buyer, the e-commerce participant, will visit this website. On this website, there is tie-up with the other website, the other app. And this seller has listed his resources, his goods and services on this app or website. See, when we say platform, it covers website, application, everything. So there is one app of the buyer and one app of the seller, multiple e-commerce activities. So what will happen is, first step, seller is going to list his product on this app, seller side ECO. Seller side ECO will tie up with buyer side ECO. And then buyer will access this. So what will happen? Buyer will pay this ECO will pay this ECO, and finally the money will go to the seller. So you have to check ultimately who is making payment to the seller. Whoever is making payment to the seller, that organization has to deduct TDS. The question is, seller, the ultimate seller is basically an e-commerce participant who is receiving the money in e-commerce. See, buyer is also an e-commerce participant, but buyer is going to make payment. TDS we have to deduct of the seller. Who is making payment to the seller? This organization is going to be deducting. This is a case where in multiple e-commerce platforms are involved. Then the seller side ECO is going to be deducting. Okay. So second situation is also clarifying the same thing, that there is a buyer, there is first e-commerce operator, there is second e-commerce operator, and this organization is going to make payment to the seller. TDS is going to be deducted by this seller. See, earlier there were two apps involved, buyer side app, seller side app. But sometimes what happens, there is one transaction, but there is a payment aggregator also involved. So buyer is going to make payment to an organization, any of your payment aggregators like PayPal, Easy Money, these payment aggregator websites, CC Avenue, Razor Pay, etc. Buyer will make payment to that payment aggregator. CC Avenue, for example, my website SS Pro Educare is tied up with CC Avenue. CC Avenue will make payment to the website like Amazon, and the website will make payment to the seller. So there are not multiple platforms involved, but there is a payment aggregator involved. Buyer and seller are trading on the same website, Amazon. But for the payment to reach from the buyer to seller, there is a payment aggregator involved. But ultimately, who is making payment to the seller? That website is going to deduct TDS. So buyer will not deduct any TDS of CC Avenue. CC Avenue will not deduct any TDS of Amazon. Amazon will deduct TDS of the seller. Amazon. And a very, very important note. This note that I have highlighted basically covers most of the questions that they have asked in that case study based MCQ. In both the above situations, where there are two portals, buyer's portal, seller's portal, or the second case where there is only a payment aggregator and one website. In both situations, tax shall be deducted on the gross amount of the sale of goods or provision of services and shall be deducted by the seller side ECO, the second ECO, that organization which is making payment to the seller. From the buyer, the money can pass through multiple channels. Finally, it will reach that website which is going to pay the seller. That website where the seller has listed his products. TDS will be deducted by that website, and more importantly, on the gross amount. On the gross amount. Sir, what do you mean by this? Meaning, supposingly buyer is paying 100, but this website is deducting charges of 2 rupees. So this website will pass on further only 98. Then this website also levies some charges, 8 rupees. So ultimately seller will get only 90 rupees. It does happen, dear children. If you are buying any video lecture from my website, if you pay through UPI, then full money comes to me, because UPI is free of transaction charge. But if you are making any purchase through credit card or debit card, there are some transaction charges which you don't have to pay, I have to pay. So these in between intermediaries collect some charges. CC Avenue takes some charges from me for collecting money on my behalf from the purchaser. So it is possible that buyer is paying 100 rupees, but seller is receiving only 90. So as a clarification, TDS will come on 100, the gross amount. The money that left the buyer. If there are any in-between transaction charges, which whoever is bearing, buyer is bearing or seller is bearing, TDS ke liye we will consider the gross amount. We are not going to subtract any expense. So you must understand that also. Okay. Sometimes there is a platform where multiple e-commerce operators are listed. So once again, the same thing we have to do, gross amount. There are multiple organizations, each one of them is taking some charges. Sometimes what also happens is, supposingly I book my order on, say I am the buyer, I book my order on Amazon. I am going to pay through CC Avenue. So there will be some charges of CC Avenue. Then money will go to Amazon. Now Amazon tells the seller that, sir, you have to deliver the goods. You are not delivering, I am going to deliver. So there is a company that will take money for deliveries. Logistics. There are in-between intermediaries also. And therefore, once again it is clarified, whatever we are paying as delivery charges, etc., all that will also be included. TDS will be attracted on the gross amount. So for example, buyer is e-commerce participant, buys goods worth of 100, but we are also charging him delivery. Not everyone is Professor Siddharth Surana, who delivers books free of cost. Sometimes the courier charges now become my loss, because in books I am not taking a single rupee home. I am delivering the books to you at my cost price. So I just consider a little bit of delivery charges in deciding the price on my website. Now sometimes in remote areas, in tier 2, tier 3 cities, in remote villages, the courier charges cross my estimate, and that becomes a loss for me. I always have the option of shipping charges extra, and within India I am doing it. Recently one student purchased my lectures from Kuwait, see Dubai, etc. Regularly students have been purchasing, so I have little idea of the courier charges already. Kuwait 7% purchase. Clearly we told him, sir, we are not processing your order, or we are ready to process, but provided you are willing to pay the delivery charges. I can't be paying international delivery charges. That courier charge is more than the total amount of books that I am charging. So sometimes the buyer will be paying delivery charges. In fact, on platforms like Zepto, Blinkit, etc., they do levy delivery charges unless your amount crosses a certain cart value crosses a certain level. So total amount paid by the buyer is 118. So buyer ka organization will receive 118. It will deduct 1 rupee and pay 170 to the seller side organization, the website. Here again 2 rupees are deducted, and ultimately seller is getting 115. Now seller wanted to sell goods worth 100 because buyer is buying goods worth 100, but seller had to collect 115 because seller has got packing charges, shipping charges, convenience fees, etc. At the end of the day, the question is, how much money buyer paid? 118. From the buyer's pocket, what money left? 118, and that is the amount on which TDS is going to be applicable. TDS will be applicable on the gross amount that has left the buyer. TDS will be applicable on the gross amount that has left the buyer, is what you need to understand, is the short summary of all the situations or permutations that they have given out here. Once again, buyer is paying 100, then they are deducting charges. Ultimately, the amount remitted to the seller is less, but finally, the TDS will be deducted on the gross invoice value, that is 100. So, in short, the conclusion, the conclusion is, whatever amount leaves the buyer, that gross amount will attract TDS. The buyer will not deduct that TDS. because buyer will pay one aggregator, aggregator will pay website, website will pay seller. So TDS will be deducted by the seller on the amount that was charged to the TDS, not the seller, my bad. TDS will be deducted by the ultimate e-commerce operator who is making payment to the seller on the amount that was paid by the buyer, on the amount that was paid by the buyer. Is that clear? Now what about GST and state charges? See, we have observed one thing throughout the TDS chapter, that GST as a rule is not going to be considered for TDS purposes. As a chartered accountant, if I make a bill of 1 lakh with 18,000 GST, my client will deduct TDS only on 1 lakh. GST component does not attract TDS. So one thing is clear, whether tax deducted at the time of credit of amount and there are GST which are GST ka, or any state levies which are indicated separately, then TDS will be deducted under this section without including GST. So that way it meets the general rule, correct? It is meeting the general rule. But sometimes what happens? Tax is deducted on payment basis. So there are some buyers who advance may deposit some money in their wallet, etc. We right now don't even know what ultimately he is going to be purchasing. It is not possible to identify the payment with GST in transactions in which an advance payment is made. See, if I take some goods from you and against that I am making payment, so I know goods ka value and GST ka value, GST value will be excluded, only goods ka value will attract this. But if I am directly making an advance payment to you, not knowing later on what I am going to buy from you, so we don't know how much GST is going to be ultimately levied. So we will deduct TDS on the entire amount. Now normally GST will not be considered, but here we are going to be considering it. Sometimes purchase returns do take place. Oh boy, I must tell you, I have women in my family and they order things from websites like AGO, Myntra, and there are a couple of, these are names that I have heard because I have seen these delivery boys coming to my house. Bro, because of these women in my family, I am telling you, these e-commerce companies are going to be insolvent one fine day. Every day they order something, they try it at home, they don't like it, next day they return. Sometimes to exchange for a different size, and sometimes there are some companies who just take the goods return. Now the problem is that buyer has purchased on a website Myntra. Myntra on the other hand has to make payment to the seller. Now buyer has paid the website, website is making payment to the seller. We have till now understood that website will deduct TDS of the seller on the gross amount that has left the buyer without deducting any charges. But the problem is, what if these goods are returned and the money is refunded? Possible hai, but TDS is already deducted. So supposingly I am the buyer, I make payment to Myntra and Myntra has made payment to the brand from which I am purchasing. Myntra is only an aggregator. I have paid 100 rupees. If charges etc. are deducted, Myntra is paying 95, but we have understood TDS will come on the gross amount 100. Though Myntra is paying 95, but TDS will come on the gross amount 100. Correct? But what happened is, I have returned the goods. If I have returned the goods, so Myntra will have to refund my 100. Brand may also return the money, or maybe we will adjust later. Question is, what about this TDS? This TDS will be adjusted in the next transaction. Is it possible there is another buyer who is buying goods worth 100 on the same portal Myntra, and Myntra has to now pay this 100 or 95 as the case may be? TDS will come on 100 only, the gross amount. This time we will not deduct TDS because we have already deducted 100 ka TDS in the past. So if there are purchase returns, then TDS will be adjusted in the next transaction. But sometimes the goods are replaced. So we are not exchanging any money. We are not sending the goods back. No, we are only exchanging it for size. If the goods are replaced, no adjustment is required. If goods are replaced, no adjustment will be required. So if the goods are returned, TDS will be adjusted in future sale. But if the goods are replaced, then no need to do any adjustment, because anything, in any case, there is a sale transaction that has taken place. No need to do any adjustment. So for return, next transaction, and for replacement, no adjustment. Is that clear? Next, where there is discount offered by the seller itself, means if the MRP is 100, but seller is selling at 90, the invoice value is 90, then the buyer will pay 90. See, all throughout you have to remember one thing. The amount paid by the buyer is the amount that will be subjected to TDS. So if the seller only has discounted it, matlab the buyer from the beginning is not going to pay 100, is going to pay 90. Then obviously TDS will come on 90. Obviously, that also makes sense. Correct? So these are the circulars that you have to be careful about. You should be reading at least once this circular, especially because there are questions with respect to this. Next is assessment procedure ka circular, which is talking about quoting of PAN. That following transactions mein quoting of PAN is going to be required. You may read through them. Not too much relevant as far as exam is concerned, but one time reading is going to be enough. Then we have a circular with respect to that latest thing. If you are aware, in the special audit ka section 142 hai, now we are going to have special audit and also inventory valuation by a cost accountant. So there are going to be accountants, that is chartered accountant and cost accountant also for the purpose of inventory valuation. Because remember, special audit will done by CA, but special audit will be done by CA, but the inventory valuation will be done by a cost accountant, and they have also decided the remuneration. So CBDT is now deciding how much we will pay. Whenever there is any special audit or inventory valuation, so there will be a chartered accountant or cost accountant or his assistants, you people who will be engaged. The fees should be minimum 3750 and maximum 7,500 rupees per hour. Listen, you chartered accountants, for doing a special audit assignment, you are going to get minimum 3,750 and it can go up to 7,500 rupees per hour. Even for your articles that are engaged, you charge that much. You don't have to give that to your article. Money you will keep with yourself. You just have to charge it to the client. Maja aa gaya na, bro? Okay, remaining circulars, I don't think any of the circulars, just a quick glance through. You may read though ye tax audit ka circular, but there is no such circular which is now relevant as far as your sum solving or your exam is concerned. The most important was the 194 Ovala circular. So ladies and gentlemen, boys and girls, that was the first part of our RTP lecture, that is the latest circulars. We now move to the second part of the RTP lecture, that is the judicial update, that is the latest case laws released by ICAI. If you observe against the case law also, there is some marking. Yellow highlight is basically important, and if a case law is in red highlight, that means it will be very important. I have written the summary of the case law in blue color here, and plus if there is anything else that is noteworthy. For example, on this very first case law, there is a question in the November 24 RTP. So did I tell you I am doing statutory update and judicial update first, because you will understand those questions. So I have done that marking. Also, this PDF also of my marking will come either on Telegram or maybe on the app SS Pro Educate. So I humbly request you that please be connected at both places. Okay. There are about 9 case laws in this PDF that they have released of 17 pages, the judicial updates, out of which only 4 or 5 are actually new case laws. So when we conducted our case law lecture in the month of March for May 24, in that some of these were already covered. So we will focus our discussion on the new ones, but very quickly we will do the entire sheet. For example, the first case law, Mahale Anand Filter System Private Limited. I have taken a premises. I'll tell you the story very quickly, so that we save time of reading. I am a teacher, not a translator. My job is not to read the data here and translate it in another language for you. So I want you to focus on the discussion. I have taken a premises on rent. So when you take a premises on rent, you pay rent plus you pay security deposit. This company had paid security deposit of 5.8 crore rupees. When they vacated the premises, they had a dispute with the owner about any damages done or not timely vacated, whatever be the reason. Finally, to get rid of the dispute, they have foregone that security deposit. Means Mahale Anand Filter System has told its landlord, its ex-landlord, sir, you keep this 5.8 crore and please leave us alone. I know we have damaged your property, don't file a case against it, keep the 5.8 crore, please. That means, can I say deposit foregone? That becomes a loss. This company took the deduction as revenue expenditure. Matter went till Supreme Court. Supreme Court held that this is not the rent that you have paid. This is security deposit foregone. And therefore, the character of the transaction was capital in nature. and as a consequence of which this is not going to be treated as revenue expenditure, it will be capital expenditure, it is going to be disallowed. Security deposit foregone by an outgoing tenant is going to be considered as capital expenditure. The tenant will not get deduction of the same. Ye clear hai? Next case law, we have discussed this. This is not a new case law. If there is demerger, then the resulting entity can set off losses of the demerged entity. There is no prohibition. It's a case of business reorganization. The set off is going to be allowed. Next, Sikandrabad Club. See, during our case law lecture, I am discussing the case laws. In any case, we have discussed a couple of case laws: Venkatesh Premises Cooperative Society, Sindh Cooperative Society, where a cooperative society is getting money from its members. Under the principle of mutuality, it is not going to be chargeable to tax. We have discussed these case laws in our previous lecture. That now you need to remember that. Okay, but what happened in this case? They have not earned money from their members. They have earned interest on bank FD, and they have earned money from other persons who are not members. See, own members ka income will be exempt. That is called principle of mutuality. But from outsiders, if you earn anything, FD, interest or non-members, it is going to be taxable. You are not going to get immunity from tax on the principle of mutuality. Tax is going to be applicable. Is clear hai? Very good. Let's go ahead. Next, Air India ka case law. Air India. So, basically the case law is with respect to the provision of section 206AA. Normally on rent, the TDS applicable is 10%. But if the payee does not furnish PAN, then the TDS will become higher rate of 20%. We are aware of that. 206AA says actual rate of 20%, whichever is higher. Now what happened was, Air India has made payment to a Netherlands-based company which has got no permanent establishment in India, and therefore the company has not acquired PAN in India. Because the company has not acquired PAN, assessing officer is saying you should have deducted TDS as per this section 206AA. That means 20%. The counter argument of Air India, this is an important case law, please understand. Air India says that there is a double taxation avoidance agreement between India and that country, and we have deducted TDS as per the double taxation avoidance agreement between India and Netherlands. And the double taxation avoidance agreement does not have requirement of PAN. My first question to you is, forget the case law. Are you able to recollect the answer to this question? TDS for any assessee is applicable at what rate? As per Act, or if I ask you what tax a taxpayer has to pay, as per Act or as per DTAA? In case of international tax, you have to pay which tax? As per Act or as per DTAA? Whichever is beneficial. And that means the payee, the receiver, has to pay tax as per whichever is beneficial rate. So obviously the payer will also deduct whichever is beneficial. One thing we all understand, that DTAA provision will override the Income Tax Act if it is beneficial. So if the DTAA ka rate is given as a beneficial rate, the DTAA will override the normal provisions, that is 206AA, and therefore the assessee is very much within its legal right to deduct TDS at the lower rate given in the DTAA. DTAA में जो lower वाला rate दिया है, assessee ने वो lower rate पे TDS deduct किया, that is absolutely okay, because normal rate can become higher because of 206AA. But DTAA ka rate will stay as it is. So whichever is beneficial में, assessee is rightfully deducting TDS as per the DTAA. Is this clear? Next, while this case law is very important, this we have discussed in class as a Supreme Court judgment in the case of an assessee called Anusuya Alva in TDS chapter. The deductor has deducted, I'll tell you the story, the deductor has deducted TDS and not deposited. Matlab, payer has deducted but not deposited. Will the payee get credit? The amount was not appearing in form 26AS. The assessing officer refused to give credit. But the payee is saying, sir, what is my fault? I have suffered TDS. Supposingly, I was going to get 100 rupees. I receive only 90 because of TDS. I am paying tax on 100. That means I should receive that 10 ka credit. No? For tax purposes, you are going to gross up. You are not going to take 90 as my income. Are you taking 90 as my income? No. For income computation, you are grossing it up. Then in that case, ladies and gentlemen, Anusuya Alva case law is now getting repeated. Means we have a modern case law on the same line. The deductee cannot be called upon to pay the tax just because the amount is not appearing in Form 26AS, which simply means the payee will get credit of TDS whether the payer deposits or not. If the payer has deducted TDS, the payee is going to get credit of the same. Understood? Next is Bharti Cellular. Bharti Cellular is basically SIM card selling company. Apna Bharti Airtel SIM card selling company. So, question is about 194H. On this ground also, we have covered quite a few case laws as far as our regular case law lecture is concerned. But you must know that whenever 194H has to apply, it applies when the transaction is of principal and agent. So, supposingly a shopkeeper is selling SIM cards and acting on behalf of the company, the shopkeeper can decide the price only on the instruction of the company. And in case the SIM cards are unsold, the shopkeeper can return it to the company. Then he is acting as an agent, and the shopkeeper ka commission will be considered as commission for the purpose of TDS. But this was a case where this company has sold its SIM cards to people called distributors. A distributor has purchased supposedly 1 lakh SIM cards of Airtel. Now, MRP of that SIM card is 100 rupees. But because you are purchasing 1 lakh SIM card in advance, so Airtel gave you a discount. Airtel gave you at 60 rupees. So 60 into 1 lakh. Distributor has paid 60 lakh to Airtel. Now this distributor can sell this SIM card at 65 rupees, 70 rupees, 80 rupees, 85 rupees, 90 rupees, anything below 100. And that is his profit. If the SIM card is unsold, the distributor has to take the beating of that unsold SIM card. Company is not going to take it back. Company is giving you 40% discount on MRP on the understanding that you are buying 1 lakh SIM cards in advance and company is receiving those funds. Company has sold the SIM cards. Your job to sell them now. Sell them at 65, 70, whatever you make, that's your profit. That is called sale to distributor, and distributor is further selling. Now, do you understand? This distributor is acting as a trader. This distributor is buying on own account. He is not selling to the consumers on behalf of Airtel. Profit or loss made on further sale of this is his profit or loss. 194H can apply only in case of principal and agent relationship. A distributor who is buying the SIM cards from own pocket. And in fact, the company Bharti does not even know what the ultimate selling price is going to be, because between 60 and 100, distributor can sell at any price. MRP is 100, distributor ko we sell it at 60. Then the distributor can sell it at any price. And this is a principal to principal trading, and therefore 194H cannot apply. On this ground also, there is a question in the RTP November 24 article. You know, this is similar to selling of video lectures, if you want to understand it like this. Supposingly my video lecture ka pricing is 15,000 rupees. There are various variants. There is 1.1 view ka variant, which is a very low priced one, and in which we don't provide hard copy. There is a 1.5 view ka variant. There is 1.2 view ka variant. I'll take the highest one, 15,000. Supposingly somebody comes to me and tells me, sir, I want to buy 100 sets of your video lectures. See, I charge 15,000 rupees one student. If you are buying 100 video lectures, 100 sets of video lectures, so obviously I will not be charging 15,000. Say I give you 30% discount. That means I will charge from you 10,500 and sell those 100 sets to you in advance by taking from you 10,500 into 100 rupees. So my normal charge would have been 15,000 into 100, but I would have to sell it one by one to 100 students. Now you have made a bulk purchase from me. After buying this, you are doing my marketing. You want to sell this video lecture to other people. You have to basically search for 100 students and sell them. You sell it at 11,000 and make 500 rupees profit. You sell it at 12,000 and make 1,500 profit. You sell it at 15,000 if some student is buying from you and make 4,500 profit. The moment you sell all the 100, you'll make your profits. I will never come to know at what price you have sold. I have sold it to you for 10,500, given you 30% discount because you were paying me for 100 sets in advance. I don't even know, and you're not acting as an agent, because if by chance the videos are unsold, by chance you're not able to get 100 students to buy my lectures, I am not going to take it back or give the money back to you. Then it becomes a Principal to principal trading. You are buying my lectures and selling it further. There can't be 194H in a transaction like this. There can't be any 194H. This is also an answer to the question. Sometimes student, any student may possibly come and ask me that, sir, on your website, your lecture is available at 10,000 rupees. On another website, the same lecture is available at 9,000 rupees. Sir, why your lecture somebody else is selling at a lower price? Sir, because that person has purchased in advance huge number of lectures from me. So I have to give them a discount of more than 10%. Supposingly, I give them 20% discount. I give them at 8,000 and they are selling at 9,000. I can give that discount because they have purchased 100 sets. You also purchase 100 sets. I will give you 30% discount. Forget 20. I'll give you 30. Purchase 100 sets in advance. But then burden of selling is on that person. So that person is bearing that discount from own pocket. My selling price is not changing. My selling price is changing only for somebody who is buying 100 sets in advance. It's a principal to principal trading kind of an activity. This cannot attract 194H. This is not going to be considered as commission and therefore there will be no TDS under 194H in this case. Is that understood? Next, IDBI ka case. This is a verbatim copy of what we have studied already as Elegant Finance ka case law in your appeals and revision wala chapter. Time limit of doing 263 revision is 2 years from the end of the financial year in which the order was passed. If a reassessment has taken place, then we will take time limit from reassessment order. But any matter that has not gone in reassessment, we will take from the original order. Matter that has gone in reassessment from the reassessment order. Matter that has not gone in reassessment, we will take it from the original order. Same as Elegant Finance. Okay. Next, GoDaddy. This company obviously is a popular company. A lot of people have heard about it. So what does GoDaddy do? If you want to start your own website, you have to buy domain name. For example, I started ssproeducare.com. I had to purchase that domain name so that anybody typing in the search bar www.ssproeducare.com is redirected to my website. GoDaddy basically sells these domain names. It is an accredited registrar for the Internet Corporation for assigned names and numbers. Basically, it is an international agency which gives domain names. Domain name is your http www.website.com or .in or .org or ICAI.nic.in on the basis of how you have made your website. So obviously there will be people who will make payment to GoDaddy. I will make payment to GoDaddy so that I get that domain name for 5 years. Is that royalty income? Because royalty income is taxable at a concessional rate. Now it has become 20. Earlier it used to be 10 only. So GoDaddy wanted to offer it as royalty income. The question is this royalty? I have purchased domain name from GoDaddy. Is this royalty? So understand please, assessee is not selling or allowing usage of its own name. I am not using GoDaddy. I am using SS Pro Educare. I am not using assessee's name. If I use assessee's name, so for using that brand, I will pay royalty. Assessee is only facilitating registration of domain name with the registrar against a fee. It is only acting as an agency that is registering domain. So obviously, this cannot and this will not be considered as royalty. Make sense? GoDaddy. If I use the name GoDaddy, then it is going to be considered as royalty. But I am using my own name. GoDaddy is only helping me to register my name. So that is not going to be considered as royalty. Okay. And I think the last case law. Whenever you are claiming any foreign tax credit, relief under foreign tax, unilateral, bilateral, you have to fill up a form. So that's the procedural part. See, calculation part we have understood. Tax credit, tax exemption, unilateral relief, which is our tax or their tax, whichever is lower. You have to file a form. Supposingly you miss that form filing before your due date of return, or while you are filing your return, you have claimed foreign tax credit, but you have not filled the form. In return, you have said, I am eligible for treaty benefit or unilateral benefit, but you forgot to fill a form. Procedure requires you filling of an existing or an additional form. A lot of forms have to be filled online with income tax department. Likewise, procedural part, it is mandatory. So at that time, you have not filed the form. But before you receive your intimation, you realize that you have missed filing of form and you file it. So foreign tax credit shall be given. See, The intention of the law is to give you foreign tax credit. Filing of form is a procedure. Procedure can be early or late, but as long as you have done it, you will get foreign tax credit. So before intimation, if you have filed your form, you will be eligible for your foreign tax credit. Ladies and gentlemen, that was the second part of our case law lecture, that is the judicial updates. With this, ladies and gentlemen, we will now go to the last and final part, that is the RTP, where, as I already told you, the MCQs, we will be discussing the solutions, and as far as the solutions are concerned, to be very honest, all the MCQs I have already solved for you. So there are about these 13 MCQs that have to be solved. I have already solved them. So very quickly I will discuss. Out of the 13 MCQs, if you carefully observe, the first 1, 2, 3, 4 MCQs are case study based, case study 1, and the next 5, 6, 7, 8, 9 are again in a case study, the second case study. So effectively, if you observe, there are total 9 MCQs which are only in the case study. For the case study MCQs, I have given this instruction multiple times to students in the past. I don't know whether you recollect the instruction or not. There is a trick which can help you to save time, because if you start reading the case study from here, every line, word, etc. First they are talking about a company called Trio, then they are talking about a company called Nice Limited, then suddenly they are changing from Nice Limited, they come to Xylo Limited, then they are talking about directors of Xylo, suddenly again they talk about Trio, then they again come to Nice. They give data in a very, very confusing manner. I'm not discussing anything right now, I'm just doing a quick glance. So yes, big story, 4 questions. Then come to case scenario 3. Multiple people that they are talking about Mr. Bhuvan, there is ABC Marketplace, then there is this buyer side, this is that 194 OCA circular that I discussed with you, then there is a seller called DEF seller, then there is an open network for digital commerce, that network where multiple e-commerce operators are listed. Here the buyer is someone else called Mr. Sarthak. Confusing story given, and then question number 5, 6, 7, 8, 9. First trick that you should always follow in exam. This will help you in exam. Your paper is of 100 marks, 30 marks MCQ, leave it aside. Don't go to the MCQs first. Because in the subjective paper, it is likely that you make mistakes in a step or two, very much possible, very much normal. But you will get marks for what you have written. Problem with MCQ is, while reading, discussing, one small word here and there goes wrong. You choose the incorrect option and finally you lose all your marks. And at the beginning, if you're doing MCQs and you're getting stuck, etc., especially in case study, they're definitely going to get stuck, considering the kind of questions they ask. It is going to badly affect the other 70 marks. Start. Your chronological step should be first, the 70 marks subjective, finish that. Because that, I must tell you, if you have done proper study, if you've solved the additional question bank, if you solved all the class questions, if you've revised properly, you will easily be able to attempt anywhere between 50, 55, 60 marks very, very easily and comfortably. Very easily. You know, from that 70 itself, you can score over 50 if you are smart. Then come to MCQ. Now, the MCQ should work as your bonus. Now, second step. In MCQ, if you talk about this RTP, there are 9 MCQs based on case study. First 4 and then 5. What happens is, in one you go wrong, you may possibly go wrong in the others as well. So first finish these single MCQ. So question 10 is single MCQ. This is the question. These are the options. Same is the case of 11 or 12 or 13. They are all single MCQs. Finish that. Your case scenario based MCQ should be the last thing that you do in exam. सर उसके लिए टाइम नहीं बचा, अच्छा है, बच भी जाता तो कुछ करता नहीं, वो वेस्ट ही होने वाला था. What happens is, case study वाले MCQ पे you come first ना at the beginning of your paper. ऐसे पूरा का पूरा story you read. While reading the story, you get lost between Trio, Nice, Xylo, you get lost. And finally, you come to question, not understanding, you're not getting anything. You waste 30 minutes, 40 minutes, 45 minutes in these 4 marks. In these 4 questions, they may be 2 marks each, but you waste 8 marks, you waste 30, 45 minutes. And that is going to affect your paper. Ultimately, you will get marks, you won't get marks, don't know. One step goes wrong, everything goes wrong. Step number 1 in exam, 70 marks subjective. Step number 2 in exam, single MCQ, which have no story, question and answer. Last में, when you come to the case scenario based, if time permits, you do come to the case study based MCQs. There is a trick. This trick may help you. Do one thing. First, see what are the questions. It will help you, I'm telling you. For example, in respect of payment made by NICE Limited for advertising services, which of the following statements are correct? Some options relating to equalization levy are given to us. Means NICE Limited is making payment to Trio Incorporation. Then when I come and read the story, I'll focus on that. That NICE Limited, an Indian company, imports computer hardware parts. NICE did not import any hardware during the year, but paid 5,50,000 for advertisement. So with this, I know that this is going to answer my first question. So I will read this keeping in mind the target being my first question. First of all, case scenarios you will do last. That is clear. One last time I am telling you, first 70 marks, then single MCQ, finally case scenario based MCQ. And in that first you will read the question. First read the question. To hell with what everything else is. A target is to get your marks. First read the questions. For example, second question. Are NICE and Trio associated enterprises? So, where is NICE? NICE and Trio बोला है कि Xylo बोला है? NICE and Trio. So based on the transaction between NICE and Trio here, we will discuss whether they are associated enterprises or no. We will check that. Third question. Compute the amount of long-term capital gain arising to Trio on transfer of listed shares of XYZ Limited. What would be the tax treatment of such capital gain? So has Trio sold any listed shares? Trio has sold 3,500 equity shares. They have given you selling price. They have given you purchase price. They have given you fair market value. They have given you STT. Matlab, this paragraph is going to answer my third question. When I come to my third question, I'll focus only on this much. Do you understand? And last question. Which of the following statement is correct in relation to remedies available to NICE if it is not satisfied with the draft order passed by the assessing officer? So, is there any order passed by the assessing officer? Yes, NICE received draft order from assessing officer as per 144C. So, one adjustment of your dispute resolution panel wala concept is introduced. Here, we will read this story and discuss the last answer. If you read the entire story, so first paragraph, first MCQ. Second paragraph, second MCQ. Third paragraph, third MCQ. Fourth paragraph, fourth MCQ. And internally they are all unrelated with each other. So the best trick about case study based MCQ is that you just have a quick glance through the questions first, so that you know that which question is going to be affected with which paragraph, and accordingly you save time, because you will read the full story. You will read this, you will read this, you will read this third para, you will read the fourth para, then you come to the first question. By the time you completed reading the fourth paragraph, you have forgotten the first paragraph. You are not able to answer the first question properly. So solution is read the first question and read the paragraph that is giving you the answer to the first question. This will help you in your case scenario based MCQ. 99% it is going to a working, it is going to be a trick that is going to work for you in the exam. A 1% chance you have to take. So chronology, first 70 marks subjective, then single MCQ, then case study, and in case study we will read the question first. So in respect of payment made by NICE Limited for advertisement services provided by Trio, which of the following statement is correct? So we will come and read our first paragraph so that we are able to get the answer to the first paragraph or to the first MCQ. Trio Incorporation, a company incorporated in country T, is engaged in manufacturing of computer hardware parts. It also owns online social networking site called Attire. Now, Facebook can exist, Instagram can exist. Likewise, there is Attire. They are given random names. So, Trio is a foreign company, non-resident, and is having an online platform, and plus also is manufacturer of computer hardware parts. NICE Limited is an Indian company which imports computer hardware parts from this company, Trio. During 23-24, they did not import any computer hardware parts. See, if we buy goods and services, then 2% equalization levy comes. So we have not purchased any hardware parts. Normally we do, but this year we have not. This line is clearly saying. but paid 5,50,000 on 24th July for advertising its business on the platform Attire. However, Nice Limited neither deducted tax at source nor equalization levy on the payment. First question, is equalization levy applicable? Let us see what are our options. Equalization levy is not attracted and no penalty. Option A. Tax is deductible at source under 195 because you are making payment to a non-resident and hence interest is payable. Equalization levy of 33,000 is deductible and penalty of 1,000 rupees per day is attracted. Equalization levy of 33,000 is deductible and penalty of 33,000 for non-deduction because nothing is deducted. First question is there TDS, equalization levy or none of them? If your answer is TDS, this will be your answer. If your answer is equalization levy, then one of them will be your answer. And if your answer is not attracted, then this will be your answer. What is your answer? Check karte hain. Is this non-resident, not having permanent establishment in India, providing advertisement services, specified service, more than rupees 1 lakh to someone in India for the purpose of business? All 6 conditions of 6% equalization levy fulfilled, and therefore 6% equalization levy, as we have already solved it. So 6% non-resident, no PE in India, advertisement service more than 1 lakh to resident for business, 6% of 550, 33,000, and when you don't deduct that, 100% penalty is attracted. 1,000 rupees per day is for something else. For non-deduction, it is going to be 100%. So the answer is going to be 33,000 ka equalization levy, and for non-deduction, there is going to be 33,000 ka penalty also. That, ladies and gentlemen, is going to become your answer. Second, are Nice and Trio associated enterprises? If so, why? So we come and check our second paragraph. Nice and Trio right now are doing only business transaction. I strongly believe there may possibly be some mistake here in, Nice Limited advanced a loan of 2.5 crore to Xylo Incorporation, an Australian company. As on the date of loan, the book value of total assets in the book of Xylo was 4.52 crore. Out of the 10 directors of Xylo, 5 are appointed by Nice Limited. Xylo repaid the entire loan as on 31st March. So basically the relationship that they have given is between Nice and Xylo. Somewhere there is a printing mistake, because if you see the options also, loan advanced by Nice to Xylo, appointment of directors Nice to Xylo, both of them above, you observe everywhere it is Xylo. This is clearly a printing mistake in the question that they have asked. This should not be, the question should not be, are Nice and Xylo associated, Trio associated enterprise. The question should be, are Nice and Xylo associated enterprise. This definitely has to be the question. So what is the relationship between Nice and Xylo? The loan advanced is 2.5 crore rupees and total assets are 4.52. That means clearly we are giving a loan of more than 51%. And if you see the definition of associated enterprises as per section 92A, they have mentioned, first they talk about capital control management. Over there they have mentioned 51% of the book value of the total assets. And then there is also appointment of directors. Out of 10 directors, 5 are being appointed by Nice. We are appointing 50. But if you go and read the definition of capital control and management in section 92A, it is stated when more than 50%. And then this question therefore means they are testing you on the importance of the word equal to. Nice is appointing 50% directors in Xylo, but this condition is applicable only if it is more than 50%. And therefore, the second condition, not less than 50% director wala part is not applicable. Director wala part will be applicable only and only if it is more than 50%. Yes. So loan advanced is not less than 51%. This is applicable, but director wala part is not applicable. So obviously due to A or B, both of them cannot apply. And if both of them cannot apply, and obviously this not associated enterprise also cannot apply. Therefore, this becomes the point because of which Nice, and correct the printing error in the material, Nice and Xylo are associated enterprises because 51% or more of the book value of asset is the amount of loan that has been given by Nice to Xylo. Next, compute the amount of long-term capital gain. That second question, loan is 51% or more, directors are 50%, not greater. So that director wala point is not applicable, therefore A. Third is directly the calculation of 112A. If you observe carefully, Trio had sold 3,500 equity shares. Selling price is 102. Cost price was 36.4 and FMV on 31st Jan 18 was 90. So what we do is, first we take selling price 102. In cost of acquisition, we take FMV or selling price, whichever is lower. So 90 becomes our answer, and this or actual cost, whichever is higher. So final answer to cost of acquisition will become, cost of acquisition ka 90, and obviously 12 rupees into 3,500 will give you long-term capital gain of 42,000 rupees. So long-term capital gain 42 is given in two options. So these two are definitely wrong. Now option A is saying 42,000 will be taxable at 10% under 112. You know, you get an instant reaction. Arey sir, 112A 10%. But then do you also know that under 112A 10% tax is applicable only on the gain exceeding 1 lakh. If this was 142, then on 42 there will be 10%. So yes, there is LTCG of 42, but there won't be any tax. There won't be any tax because the amount is not exceeding rupees 1 lakh. If this amount had exceeded rupees 1 lakh, then there would have been tax. Okay. So you realize that because you first read the questions, then solving of your case study based MCQ actually becomes a little easy. Similar trick we will follow for our second case study, that is MCQ number 5 to 9. Is there any tax required to be deducted by Mr. Bhuvan? Okay, so Bhuvan must be paying something. We will discuss. Is there any tax required to be deducted by Mr. Sarth? Okay, we will see that also. What would be your answer? Would your answer to MCQ 5, acha, that this question, MCQ 5, Bhuvan wala question, be different in respect of the order placed by Mr. Bhuvan if DEF seller is an individual and this is the only sales? Means there is slight modification in the question. Will your answer change? Assume that Mr. Bhuvan replaced 5 toasters and returned 5 toasters out of 100. What would be the TDS adjustment? So now you understand the circular that we studied today's class only about purchase return and replacement. In replacement, no adjustment is required, but in purchase return, we will adjust in the future sale. So that is a theory question. We don't have to solve or check anything also. Assume ABC Marketplace provides a discount of 10 each to both Mr. Bhuvan and Mr. Sarthak on the sale of toasters and hot clock. Is there any tax to be deducted at source? If yes, on what amount? So it basically is one more thing, that some discount is provided. So effectively, this full MCQ case scenario is based on that new 194 acre circular that has been introduced. The time has come to actually go and check the story first. Mr. Bhuvan places bulk order on ABC Marketplace. So can I say this will act as ECO? And Bhuvan is basically the buyer. ABC is ECO. Bhuvan becomes the buyer. An e-commerce operator for buying 100 toasters, a product listed by DEF. So basically Bhuvan will pay ABC and ABC will pay DEF, a partnership firm. ABC Marketplace acts as buyer side ECO to Mr. Bhuvan as well as seller side ECO for DEF seller and charges convenience fee of 10 rupees per toaster to DEF seller. DEF seller processes the order and charges the buyer 1170. So ultimately, buyer Mr. Bhuvan for his 100 toasters is going to pay 1170. This will include packaging, shipping, convenience fees. DEF seller pays 5 rupees for logistics, 15 rupees for packaging, 10 rupees for toaster. Ultimately, these are all expenses of DEF the seller. From the buyer, we are collecting 1170 rupee. From the buyer, we are collecting 1170. Is buyer paying 1170? So is that 1170 going to be liable for TDS? Yes. Achha, from that 1170, there are packaging charges, logistic charges, convenience fees. We have clearly today only studied the circular on the gross amount, on the gross amount, on the gross amount. Matlab finally TDS will come on 1170 into 100. Uska 1% karoge to you will get 1170. But the question is, who has to deduct? Order is placed by Mr. Bhuvan. Who will deduct TDS? 1170 is given in two options. Obviously, DEF seller will not deduct own TDS. So who will deduct? Who will deduct? Obviously, ABC Marketplace. And did we discuss that the amount that buyer is paying, the gross amount without any adjustment of expenses, will be the amount liable for TDS, but TDS will be deducted by that ECO who is making payment to the seller. Come to the story. Bhuvan is paying ABC, and ABC, after adjusting those charges, logistics, packaging, etc., will pay the seller. Ultimately, his payment of 1170 will attract TDS, and this organization is liable to deduct that TDS. So effectively, we realize. अच्छा, previous वाले का एक question रह गया. I'll come to that after finishing this. Okay. Buyer is Bhuvan. He is paying 1170, and ABC is making this payment. So 1% of this 1170, 1% of this amount is going to be your TDS. 1% will be deducted by ABC marketplace. Understood? Okay. Is there any tax required to be deducted in respect of order placed by Mr. Sarthak? If yes, by whom and what amount needs to be deducted? Now let's talk about Sarthak custody. Sarthak placed an order of 500 decor wall clocks on this open network for digital commerce. This is ONDC, basically means a lot of e-commerce sellers are registered on that one platform. These clocks are listed and owned by ABC Marketplace. So this time ABC Marketplace basically is acting as the seller. This time ONDC is going to act as the ECO. ONDC is going to act as the ECO, and ABC Marketplace, who was last time the ECO, this time will become the seller. So Sarthak will pay ONDC and ONDC will pay ABC Marketplace. Who is the seller? ABC. Sarthak made a payment of 665 per wall clock to ONDC via Paytm, and ONDC credited 655 only because ONDC is going to deduct its own charges of 10 per wall clock. So ultimately ABC is going to make invoice of 665. Sarthak will pay 665 to ONDC, and ONDC will release 655. Plus there will be other packaging charges, convenience fees, etc. also. But we are clear that TDS will come on the gross amount 665 into 500, of course, on that 1%. And who will deduct? Who will deduct? Who will deduct? Let's be clear. Who is making payment to ABC, the seller? Last time ABC was ECO, but this time ABC itself is the seller. ONDC. So TDS will be deducted by ONDC on the gross amount which Sarthak is paying. Sarthak will pay ONDC. ONDC will deduct TDS on the gross amount. Buyer Sarthak is paying 500 into 665 to the platform. Platform is making payment to the seller. This time ABC, who was last time the e-commerce operator, has this time become e-commerce participant. On this amount, the gross amount, we will ignore the transaction charges, convenience fees, delivery charges, 1%, and therefore we are going to choose our option 3325 to be deducted by ONDC. What would be your answer to MCQ 5, or would your answer to MCQ 5? MCQ 5 was that Bhuvan wala question. Here we have deducted TDS of the seller DEF, correct? Will the answer be different if DEF seller is an individual and this is the only sales order received? What is the value of that sales order? 1,17,000 rupees. So do we know in 194 there is an exception that in case of individual HUF up to 5 lakh there will be no TDS. There will be normally TDS on every amount, but for individual HUF there is an exception prescribed, and accordingly in this case, therefore, because the assessee is individual, tax is not required to be deducted in this case because the assessee is individual, as the amount is up to rupees 5 lakh. In case of individual, see last time DEF was probably a partnership form. So there will be TDS on everything. But if DEF is an individual, there won't be any TDS. Next, assume that Mr. Bhuvan replaced 5 toasters and returned. So we already know replacement ka no adjustment, and return ka we will adjust in the next. So no adjustment required for replace, and amount of TDS on return toasters would be refunded. It will be adjusted in the next sales. No adjustment in respect of both, wrong. No adjustment is required for replaced, and amount of TDS will be adjusted against the next sale. This becomes the correct answer. 8 ka answer C, directly targeting the data in the circular. Assume that ABC Marketplace provides a discount of 10 each to both Bhuvan and Sarthak on the sale of toasters and wall clocks. Is there any tax required to be deducted at source? ABC is providing discount. Now come back to the story, original story. Here ABC was the ECO. So the seller is still charging the full amount. So this TDS is not going to change. This TDS is going to be same because seller is charging the full amount, the gross value. But here ABC itself is the seller, and ABC itself the seller is providing a discount of 10 rupees. So this selling price in this case from 665 will become 655. So Bhuvan ka transaction will still be 1170, but Sarthak ka transaction will become 655 rupees. So this we have already discussed. This selling price of the e-commerce participant is what? In case of Mr. Bhuvan, it is still 1170. As DEF is charging the same thing, it is ABC who is bearing the discount. It is the same. So 1170 only. But in respect of clock, ABC itself is becoming the e-commerce participant, and the seller itself is providing discount. If the seller is providing discount, then the buyer is paying only 655. Then 327,500 where we will apply 1%. So 1170 and 3275 given in option C. 1170 and 3275. Yes, there is going to be TDS on what amount? 1,17,000 and 327,500, option C. So in situation 1, in the situation of Bhuvan, the website was providing discount, but the seller was charging the full amount. So we will not reduce anything. It will be this only. But in situation 2, the seller himself, ABC was seller. See, ABC is playing double role in the story. In the first case, ABC was acting as aggregator. Goods belong to DEF. But in the second case, ABC itself is the seller. If the seller is providing the discount, then we will reduce the taxable value. Is that clear? Okay. That question number 4, that one question from the previous case scenario. Apologies for the inconvenience. Which of the following statements are correct relating to NICE available to NICE Limited under the Income Tax Act if it is not satisfied with the draft order? So this last paragraph was talking about draft order. NICE Limited received draft order from assessing officer as per 144C, that is dispute resolution panel ke andar. Whenever you are an eligible assessee, the AO will not make the final order. He will first give you the draft order. You have got two options. You don't do anything, so draft order will become final order. Then you can go for your normal course of appeal. Alternatively, against the draft order itself, you can go to the dispute resolution panel. So, due to variations determined by the transfer pricing officer for assessment year 23-24, NICE Limited did not prefer to file objection against the draft order before the DRP. Instead, it wants to file an appeal. Is that possible? What are they asking? It can file. Is that facility available against the draft order? Can you go? Yes, you are allowed to go. It can file appeal also because order is passed. Order is passed by the assessing officer. So appeal is also allowed. Yes, that means both remedies are going to be available. So if we talk about the most appropriate answer, it is going to be either A or B. Both remedies are going to be available. See, option is yours. You go for appeal or you go to DRP. Both remedies are available. Once you go to DRP, then you can't go to CIT appeal. DRP comprises of CITs. So DRP ke against you will have to go to ITAT. Very easy theoretical question. And second, MCQ case scenarios completely based on that new circular that has been released. Next, Dynamic Limited, an Indian company, took on lease commercial premises for its operations. After some years, company decided to vacate the premises and relocate to new location. Dispute arose with the lessor regarding terms of vacating the premises. To resolve the dispute and avoid prolonged litigation, Dynamic agreed not to claim security deposit of 3.4 crore. Is it going to be allowable as a deduction? So very clearly we have seen that Mahale case law, Mahale Anand filter system wala case law, under which it is going to be considered as capital expenditure. Directly question on case law. Being a capital expenditure, this is going to be disallowed. Option B mein diya, no deduction as it is capital expenditure. Fantastic. Next, Satya Trust, a public charitable trust registered under 12 AB of the Income Tax Act, runs hospital for treatment of various diseases. Mr. Shaurya, son of Neeraj, who is founder of this trust, was admitted in the hospital for heart surgery. He was charged total fee of 3.6 as against 7.4 that is charged by the hospital to other people for similar treatment. Board of Trustees are of the opinion that on the account of providing this benefit to Mr. Neeraj, the registration of the trust can be cancelled and the exemption under section 11 would be denied. Is the opinion correct? Now, in recent times, there has been an amendment in charitable trust chapter where they have defined specified violation. Activities are not proper, etc. A lot of things they have given. If there is specified violation, investigation will be done and registration will be cancelled. But surprisingly, providing benefit to related parties of the trustee does not fall in the definition of specified violation. So cancellation of registration cannot be done. However, is this benefit to specified person? So as per section 13, exemption can be withdrawn. So exemption will be gone, but registration will not be cancelled. Why? Because this is, ladies and gentlemen, not a specified violation. No cancellation of registration, but exemption can be withdrawn, and therefore we will choose our option D. No, registration cannot be cancelled, and value of benefit provided to Mr. Neeraj will be deemed to be income of the trust. Okay. Next, Mr. Aviral opened a bank account in country R on 1st July 20, and he has made deposits of foreign currency equivalent to 5 lakh on this date, 7 lakh on this date, 12 lakh on this date, and 25 lakh on this date. So total deposits are 5 plus 7 plus 12 plus 25 out of Indian income which has not been assessed to tax. So basically this is a question on black money. The deposit of 12 lakh on 1st September 22 is made out of withdrawal of earlier deposits. Means the amount which was deposited was withdrawn and then again deposited, these two amounts. Further, out of 25 lakh deposited on 1st March, Mr. Arvind withdrew 2 lakh on 31st March. The value of undisclosed asset in the form of bank account will be how much? If you recollect the Black Money Act discussion, the rule is total of all the deposits. We don't see the closing balance, because in the closing balance you may have withdrawn. I have undisclosed income of 50 lakh, but I withdraw. Balance becomes 0. But 50 lakh was undeclared. So we will take the total of our deposit. So we will take 5 plus 7 plus 12 plus 25, with only exception being if a deposited amount is withdrawn and same amount is again deposited. So that we will not be taking. So this 12 comes from 5 and 7 only. So that you will not be taking. So what you will be doing is, you will be taking 5 plus 7 plus 25 plus 12. This is the total. But this deposit which you have withdrawn and deposited, any deposit made from withdrawal will be adjusted, but other withdrawals will not be adjusted. Like that, we will not allow you to subtract all your withdrawals. Only those withdrawals which have already been considered in the deposit. So 49 minus 12, 37 is going to be the amount that is going to be taxable as per the Black Money Act. Total of all the deposits, aggregate. So we will ignore this 2 lakh altogether. Aggregate is 49, but we have to subtract 12 lakh because it is from the initial deposits only. The same amount was withdrawn and again deposited. So we can't take the same amount twice. Ye clear? Last, oh, what a lovely question, I must tell you. Okay, a little attention gap here and there. It is like, there is a very popular Hindi proverb, Nazar hati durghatna ghati. How do I translate this for my South Indian students? I'll say it again. You type this on Google search bar, then translate in your local language. I'll just say it again. Nazar hati durghatna ghati. Just translate this in your local language in Google Translate. Don't expect me to do that. Very difficult, I must tell you. Okay. So look what is happening. G Limited, a resident Indian company, on 1st April 23 has borrowed 80 crores from Messrs M Incorporation, a company incorporated in country F. That means, can I say the Indian company is the borrower that has borrowed funds from a foreign company that is located in country F? Indian company is the borrower at an interest rate of 8% per annum. Okay. The loan is repayable over a period of 12 years. Further, the loan is guaranteed by A Incorporation that is incorporated in again country F. There is a fourth entity. So G is taking loan from M. Guarantee is given by A. And there is C, who is a non-resident and holds 40% voting power in both G and A. C has also deposited 80 crore with Messrs M Incorporation. Hey Bhagwan, somebody please kill me. Okay, wait, I'll do one thing. Let's understand what is happening. Okay, let's understand what is happening. G is that Indian company in our discussion. Let's interpret it line by line. G Limited is a resident Indian company. It has borrowed 80 crore from M Incorporation. Stop here. That means, can I say M has given a loan to G, the Indian company? First line is clear. First line I have incorporated in the chart. Fantastic. Next. At an interest rate, that is fine. The transaction we are checking. the said loan is repayable over 12 years. That is also fine. But matlab one thing we are clear that M has given loan to G. This loan is guaranteed by A Incorporation, which is also foreign company. Matlab इस loan का guarantee who is giving? M is giving loan to G. ये foreign company, ये foreign company. This C is a non-resident, and this G is Indian company. So M is giving loan to Indian company, and guarantee is given by A. A is acting as guarantor on behalf of G to M. ठीक है? C a non-resident. So यहां तक हो गया. This loan is guaranteed by M. C, a non-resident, holds shares carrying 40% voting power in both G and A. Stop here. So C is holding 40% in G and 40% in A, not M. Means C has got nothing to do with M, at least till now. And finally, C has also deposited 80 crore with M Incorporation. So C has also deposited 80 crore with M Incorporation. M is giving loan to G. A is giving guarantee of that loan. C is holding 40% in A and G. And C is giving 80 crore to A. First question, are C and G associated enterprise? Very clearly, 40%, 26 or more. While it is appearing that M is giving loan, do you realize that my associated enterprise gave money to M, same amount 80 crore, and then M gave me the loan? That means indirectly, can I say this money is coming from my associated enterprise C? C is giving the money here and the money is coming. Do you understand the cycle here? C is giving loan to M and M is giving loan to me. I am G. C is giving loan to M and M is giving loan to G. That means my associated enterprise is basically giving me this loan. Correct? Hai? Because do we know that under 94B, if I take loan from my non-resident associated enterprise, then interest deduction will be restricted to 30% of EBITDA. Correct? Hai? Second, one more thing you observe. Are A and G also associated enterprise? C is to associated directly. But are A and G also associated? Yes. Because the same party C is holding 40% in A as well as G. When a common enterprise is holding 26 and more, or 26 in both, then are A and C also associated? Yes. And A is giving guarantee. There is one more way in 94B gets, in which 94B gets affected. If my associated enterprise gives guarantee, then also 94B attracts. And if my associated enterprise deposits an equivalent amount, then also 94B. Matlab 94B here is getting attracted in two ways. One, C is my associated enterprise because of this 40 and this 80 crore. And A is my associated enterprise because of both 40 and this guarantee. Matlab 94B is coming in two ways. Interest payable by G to M would be subjected to limitation. There is limitation on interest deduction now. Why? C is holding 40% in G. This was the first condition. C is holding 40% in G. C is holding shares in 40% in G and A both. But this is attracting the second situation. A is becoming associated enterprise because of this. A guarantees the loan. Matlab, if you observe carefully, these two together trigger A wala situation. A is giving guarantee and A and G are associated enterprise. And C has deposited 80 crore. So these two are related with each other. If you observe, in this case, 94B is coming in two ways. One way is my associated enterprise. Why associated? Because of this 40. Matlab, my associated enterprise is giving the same amount, 80 crore. Matlab, condition 1 and condition 4 that they have given together trigger 94B. One way is 94B, one way in which 94B is getting triggered on me is the joint reading of 1 and 4. And the second way in which 94B is getting triggered is the joint reading of 2 and 3. Sir, why? Because A is also associated and A is also giving guarantee. Why is A associated? Why is A associated? Because common is having 40% in both and A is giving guarantee. Means you understand the four situations that they have given here are actually not your options. Options now start. The most appropriate answer is 94B getting triggered because of 1 and 4? Yes. C is holding 40% in G and becoming associated enterprise, and C is giving 80 crore to M. So 1 and 4 together attract 94. But then so do 2 and 3 also. So do 2 and 3 because A is associated and giving guarantee. C is associated giving funds. A is associated giving guarantee. C is giving funds, that is visible. A is giving guarantee, that is visible. Now why are C and A associated? C directly 40 and A common having 40. So this is also triggering 94B. This is also triggering, and therefore the most appropriate answer actually will become this. When both are triggering, the most appropriate answer actually will be this. 94B is getting attracted in two ways. Associated enterprise C. Why? Because of 40%. Has deposited funds with the lender. So 1 and 4 together get triggered. Option A becomes the right answer. Associated enterprise A. Why is A associated? Because C holds 40% in book. Has guaranteed the loan. So that is case 2 and 3. So option B gets triggered. When option A and option B both are getting triggered, therefore the correct answer will be either A or B, and that correct answer is given to you in your option D. Matlab 1 and 4 are correct options. 2 and 3 are correct options. So if I choose 1 and 4, that is correct. If I choose 2 and 3, that is correct. But the most appropriate answer is basically going to be both of them, either A or B. Sorry, the option should be option D, either A or B. Because of A also it is getting attracted, because of B also it is getting attracted. And that is how we are going to choose our most appropriate answer. What a question. What a question. Superb question. You need like real detailed level of knowledge in order to understand what exactly they have asked here. Okay. Moving forward, these were the MCQs. If we talk about the subjective questions, this is plain and simple PGBP ka question. Of course, it contains your MSME wala amendment. Please make sure that you go through the amendment cum revision lectures that are uploaded. First lecture is uploaded on YouTube, and the subsequent parts are uploaded under free courses of SS Pro Educare app. All amendment cum revision lectures. So your amendment will also take place. Your revision will also take place. Over there, discussion about MSME, etc. I have done all of that. Otherwise, it is basically a simple PGBP ka question. 80 JJAA ka deduction is asked, etc. So you, and book profit is also given. That means it is old regime, of course. You have to calculate the total income and tax liability. Next is with respect to the latest amendment that has taken place in your 44 AD wala case, wherein 2 crore ki jagah pe you are getting 3 crore for giving presumptive taxation. It is based on partnership form, so you have to do a little research on 40B also. Next is this question on REIT. This I wanted to discuss. See, that way it appears like our classroom REIT question. Okay, beta is an REIT. It holds 65% in H limited, so H will become special purpose vehicle. So interest from SPV will be exempt. Dividend from SPV will be exempt. Short-term capital gain on sale of development properties will be taxable for the business trust at MMR. Interest from unlisted debentures. You know, all these appear same as what we have, solved that REIT ka question in class. Rental income will be exempt for the business trust and therefore taxable for the unit holders. Mr. Arpan, a resident, holds 70% of the units of REIT. Matlab whatever is taxable for unit holder, 1 income, 2 income and 3 incomes are taxable for unit holder. Interest from SPV, dividend from SPV and rent. उसमें से Arpan has to pay tax on 70% because that is his holding. No, unit holder की taxable income का 70% will be taxable for Arpan because he is holding 70%. Has acquired the units at a price of 1.5 crore. He does not have any other income during the year. During 23-24, the REIT distributed 20 crore rupees to its unit holders. So, do you know there is a latest amendment that has taken place in REIT chapter relating to IFOS? We will see the total distribution made by the REIT to the unit holders. We see the total distribution. Out of the total distribution, there are certain incomes that have already been taxed. So, what we are going to do is, from the total amount distributed, we will first subtract the incomes that have been taxed. The incomes can be taxed. Certain incomes were taxed for the unit holders, certain incomes were taxed for the REIT. We are going to adjust all of that. After we adjust all of that, that means your dividend, your interest, everything. After we adjust all of that, we are going to be still having some extra distribution that is being done to our unit holder. That was the latest amendment. So total distribution minus whatever has already been taxed, we subtract all of that, and uske upar we are going to apply 70% and take tax from Arpan. Of course, in this we have been told that we are going to be subtracting the cost of acquisition. So go check the latest amendment that we have covered in business trust ka chapter relating to income from other sources. This last wala part is directly testing you on that. Total distribution minus the amounts that are already taxed minus the cost of acquisition. There was a formula that was taught to you. If you apply that formula, you are going to get the answer as I am trying to discuss with you here. So please check, you will get an idea of what I am talking about. Okay. H Limited has opted to pay tax as per 115BAA, which means dividend income is also going to be taxable, because only if the SPV is in new regime, it becomes taxable. Next is that case law of Bharti Cellular, that distributor wala case law. Distributors are principal, not agent. So there is not going to be any 194H ka TDS. Next, survey conducted at 9:30 PM after sunset. It is allowed if it is kept open for the purpose of business. Survey can be conducted. Ye clear hai? Okay. Then this question number 20, I request you to solve. This is a question on DTW, unilateral relief. India ka tax, foreign ka tax, whichever is lower. But the catch, the twist here is that foreign ka jo tax they have given, no, foreign also they have given slab rate. Country X mein slab rate hai, country Y mein flat rate. See, country by country tax rate can change. So what we will do is country X ka income supposedly 10 lakh. We will apply these slabs. So 10 lakh ka what example hai, whatever is the tax, we'll get that. So we will get average rate of tax like we do Indian tax, no, total tax upon total income. We will here also take the average rate of tax, and finally we'll do country X ka income into average rate of tax, country X or Indian tax or foreign tax, whichever is lower. That will be relief in respect of this. And country Y mein what we will do, average Indian tax rate or 27%, whichever is lower. So just that foreign ka rate also is given on the basis of slab. It will be good if you are solving this, so better rahega. Next is basically a small little question on poem. When you do my additional question bank, honestly, poem is that way not too much important for exam purposes. There is one circular given. If you have solved the entire additional question bank, you will definitely get that circular of poem. It's a theory question. You can very, very peacefully do this. And finally, we have this last question, which is basically transfer pricing ka question, where we have to make our transfer pricing adjustment. So, you know, a related party, unrelated party, we have to apply that. We have to make the transfer pricing ka additions, and when we are making the additions, remember that against the additions, that SEZ ka deduction is not going to be allowed. So that REIT ka question and DTAA ka question, these two questions you definitely solve. I also suggest that PGBP ka jo question hai, that full-fledged question of computation of total income and tax, and that 44 AD wala amendment wala partnership wala question, at least that much you should be solving. Remaining questions you can go through the solutions, and MCQs I have already solved. I will try to make the PDFs available as soon and as early as possible. So kindly stay in touch on the Telegram channel, and kindly also stay in touch on the SS Pro Educare app. It is my humble request to kindly go through all amendment and revision lectures on YouTube and SS Pro app together. If anybody wants the link of Telegram, or if anybody wants the link of SS Pro ya download mein you need help, so somewhere on the screen, or if it is not flashing, I will only give. This is the number of our office WhatsApp team. You can send a WhatsApp on this number 709-709-6161. Send a WhatsApp on this number, and the office team is going to help you in respect of downloading, in respect of to locate where the PDF is uploaded, where the lectures are uploaded. Please make sure that you do everything. It is a strong feeling that in the near future, CA final exams ka pass percentage are going to improve. Institute is spoiling the pass percentage of foundation. They are making entry difficult. Very sensible, very logical. Those unfit will be filtered out there as well, there itself, and only the fit people will be taken further. They have massively improved the pass percentage of inter and final, almost 30% in the last attempt. So please make sure that you make most of this opportunity. Little effort also you'll put, you are going to be clearing these exams. All those who joined for this RTP lecture, thank you very much. I know we are a little late, but then for May exam also RTP ka lecture, that is case law ka lecture, takes place in last week of March. So last week of September we have done it. Thank you very much. Have a nice career. This, because it is going to be your last interaction, I request that if you clear, I should not be coming to know it from other sources, from external sources. If you are my student, it is expected that you inform. Last few years final CA का students का tendency, attitude, behavior has changed so badly that our expectations have drastically fallen. But still, it is my request, please, when you clear, I will be as happy as you, happier than you. Please make sure that you communicate this once you clear. All the best, everyone. I am with you. Okay. Om Namah Shivaya. Har Har Mahadev. All the best, everyone. Thank you very much.